Everyone has to live somewhere, and everyone has to invest their money someplace. So what happens when where you live meets up with where your money is invested? Hello, real estate. Hey, welcome back to Big Money Real Estate. I'm Elise Glenn. Here's your daily update. I've got Rob Dietz back on the show with me today to talk about a really interesting trend he just wrote about. He's an economist with the National Association of Home Builders, and he's been taking a longitudinal look, yes, you heard that right, at the home building recovery statistics that are coming out of the Census Bureau, which we just announced. The Census Bureau just announced some new numbers. We're going to get to those in just a minute. The big picture is where I want to start, though. Hey, Rob, welcome back to Big Money Real Estate.
Thanks for inviting me back.
Sure thing. All right, so we saw the number from GDP last week, and off air we were just starting to talk about it. The number was 0.2% for the first quarter of 2015. That's basically nothing. That may even be less than nothing. What do you think's going on there?
Well, yeah, I mean, it's effectively zero. It's the second year in a row that we've had a slow start. It's actually slightly better than the slow start that we had for 2014, where it was more than a negative 2% drop. So it's a weak start. You saw a lot of weakness in areas of the economy, including in the investment category, which includes home building. Home building was just marginally positive, but non-residential real estate investment was negative. So there was some pullback by business investment. We'll see if housing can kind of pull the economy as a whole as we move through 2015.
You know, it's interesting. We've been waiting for the home building construction industry to pull us out of the recession since, let me think, 2008.
Right.
Hasn't happened yet. We should be building between 900,000 to 1,000,001 new construction residential units. My view of it, I'm not the economist, you are, but I wear one at the office at home. But when I look at those numbers, I think we're not really increasing, and there are a whole lot of reasons, I think, for that. So you've got year over year that the pace of private single-family construction spending increased 7.8%, and multifamily is up 23.4%. Those numbers sound really good. What's going wrong?
Well, the single-family component is, even though it's growing, it's so far below the levels that we would consider normal. We have growth rates of 10% for this year, greater than that for 2016 on the single-family side. Even with those growth rates, by the end of 2016, we're still at only about 80% of normal production levels that would be dictated by population growth and replacing older homes. So to the extent that home building has contributed to economic growth, and it has, I mean, we've created jobs, it's really been a multifamily story. And as you pointed out, that census number is a good indication of that. We're up more than 20% year over year on multifamily. It's just that single-family component is lagging. This is a story about rental demand growing and the home buying demand, at least on the new construction side, lagging behind.
What's interesting is that you said, so multifamily is growing. And March, we saw multifamily construction spending of almost $50 billion, and yet that was 2.1% lower than February. So that's kind of going the wrong way as well. We'd like to see all of this kind of increase. Let's talk about weather. You know, I always wanted to be a weather girl. It was a bad winter. In some cases, if you were on the East Coast, it was a worse winter than last year. Last year was a horrible winter for the Midwest.
Right.
And yet the numbers are still below and lousy. Can't all be about the weather, is what I'm thinking.
I agree with that. You know, you look at the numbers. For example, we saw new home sales really weaken in the Midwest, particularly the Northeast. You can blame that on the weather. You know, when you see softness in new home sales and traffic numbers in the West, it's part of the ongoing story, which is for housing. This is a slow, modest, halting at times recovery. Even the multifamily numbers, month to month, you can get a lot of volatility in rental apartment growth. Now, on the single-family side, what we really need to see is a big increase in household formation. Now, fortunately, there are clues that may actually be happening. We now have 2 quarters in a row where the Census Bureau has indicated that household formations are growing at a rate of more than 1 million a year. That's kind of twice the rate that we saw just after the recession. And it's been one of the reasons that housing demand, both rental and for sale, has been weak. So if we see another quarter or two of that kind of rate of household formations, people moving out of apartments, moving out from their parents' couch. Maybe we won't be talking about the weather. We'll be talking about renters becoming home buyers going forward.
I don't know. I think that's a big leap. When I look at millennials who are out there, they've got huge debt. We've talked about this before. They've got a huge amount of school debt. They've got credit card debt. If they're moving out for the first time, it's not like they're going to become home buyers next year.
Oh, absolutely.
So you
Yeah.
could be talking about another 4 to 5 years before they gather enough money and get the credit necessary to actually move into their own place or to buy a place. Let's talk a little bit about what your longitudinal look at the census data actually is. I love that name. What are you looking for with that?
Just time trends. So, again, we've got strong growth in multifamily. Single family is doing okay. One of the interesting things that comes out of some of the census construction spending numbers is that we've got a data point that we don't trust a whole lot, and that has to do with improvement spending. And in fact, it's actually kind of interfering with the headline number for residential construction spending that comes out of the Census Bureau. They've got improvement spending, basically remodeling growth, as strongly negative. And that doesn't make a lot of sense because usually remodeling occurs with existing home sales. And after some weakness in 2014, we've now seen, for example, in the pending home sales report, growth for existing home sales. So we're a little mistrustful of some of the improvement spending numbers. And in fact, our own industry data suggests that over the last 2 years, remodelers are fairly positive about the marketplace. So
Yeah,
census numbers are important, but we're looking at them with kind of a degree of skepticism.
I think that remodeling number is really sort of interesting, this improvement number, because we have had on one of the economists for House, and House is, of course, the website that everybody pins all of their stuff up on, what they want their houses to look like, and they do some looking at the different various numbers on what's going on with home improvement projects, and they were just on our show, they see a very strong summer coming up for home improvement projects. They think the numbers are big. The American Institute of Architects thinks the number is big for improvement projects. So it does seem that the census is a bit off, and I wonder, I know we have to account for a lot of how that's collected, but I wonder why it seems so wrong. I hope
There
they're
might
not
be a
right.
technical reason. They might have to revise the numbers based on something called the Consumer Expenditure Survey, which is
Right.
done once a year. That tells us kind of what households are spending money on. But yeah, our internal numbers, we have a remodeling market index that's strongly positive. The Harvard Joint Center on Housing Study numbers for remodeling is strongly positive. So remodeling is growing. We just have this one number from the census that's sort of at odds. And my guess is it'll be revised up to kind of match those other sources.
So about 10 days ago, I was fortunate enough to hear Austin Goolsbee, who's obviously a respected economist, and Randy Kroesner used to be another economist on the Fed. They both are part of the University of Chicago Booth School of Business. And so we had an event at Booth, and they were both speaking. And both of them said they thought that the GDP number was going to be dreadful, which it is. And they also said they thought the next GDP numbers were going to be awful. And then looking backwards, it didn't look good. And they really didn't have a lot to say that's positive. And part of what they're looking at, I think, is how Europe has actually gone negative for interest rates. They specifically called out Switzerland, but you could say the same about a half a dozen other countries in Europe where if you put $100 into a bank in one of the ECB banks, you might get $98 back. Why there's a flood over here to the U.S. where if you put $100 in the bank, you'll get $100.25 back. That's seen as a whole lot better than losing money on the money. How much does that play into, first, mortgage interest rates? I mean, I don't know how the Fed can even raise rates in an era where you're looking at negative interest rates. That's a really big story that I think just isn't being talked about. But then also in terms of what's going on in this country with, the strength of the economic recovery, there have to be other issues in the economy if the world is sort of flattening or even going negative. What do you think?
Yeah, I mean, the strong dollar is obviously a concern because it reduces exports. So that's going to take a toll on economic growth. We know interest rates are going to go up in the United States. That will have an impact on housing. Although I think the bigger binding constraint is qualifying for a mortgage rather than the cost of capital each month. So, you talked about student loans, accumulating that down payment. Some of those issues are stronger impacts for the housing market. I think there's also something to be discussed about in terms of regional growth. 2014, we really benefited from the energy sector's growth, and that helped housing markets in places like Texas. We know there's some weakening there with oil price decline. So, yeah, I think now this is a story about some of these global conditions affecting the U.S. marketplace. But while I don't think the second quarter GDP numbers will be awful, I don't think they'll be like the first quarter. They'll be a little weaker than what we hoped. 2 point something, certainly under 3%. But our long-run forecast for 2015 and 2016 is for 3% growth. And we think that's obtainable because there's still a lot of slack in the economy. And job creation, even though it got recently revised down for the end of the year, is still looking positive, at least better than in years past.
Let me just ask you one final question. Do you see the mom and pop home builders, the ones who build, say, 1 to 20 houses a year, do you see that those home builders are coming back, the mom and pop shops? They really got hit so hard in 2008, 2009, 2010. You lost a lot of people who were actually building, who had the wherewithal to build. Where do you see that growth coming? Is it coming back?
Yeah, some of them got into custom home building, sort of that higher end, which is one of the reasons that new home prices are rising. It has to do with the
Right.
type of home that's being built. I think that mom and pop home builder, which really represents about 3/4 of single family production in the country, it's going to be a story about getting access to lots and access to labor. And those are really the big challenges for that small home builder right now. Can they get a lot to build on? Because they can get a construction loan from the bank, but they might not be able to get the loan to acquire the lot to actually develop it in the first place. And then once they have a customer lined up and a lot to build on, can they get the workers at the right time to build? And the story appears to be one of challenge, but I think in most cases they're going to be able to do that, and that's one of the reasons that we have single-family construction growing this year. It's that sort of smaller home builder in those smaller markets that's going to experience growth.
Interesting. Well, Rob, thanks so much for being with us. Rob Dietz is an economist at the National Association of Home Builders. I hope you'll come back again. I always have such a good time talking with you.
Yeah, great. Thank you.
All right. And thank you for watching this episode of Big Money Real Estate. You can send me your real estate investing and personal finance questions on Twitter and Facebook. And be sure to share this video on all your social media. Until next time, I'm Elise Glink.